good morning, traders. I think they have seen the pound open up about 15 points higher against the US dollar. We've seen a little bit of very, very modest strength against the crosses this morning. And we have seen the formal ratification of the withdrawal agreement, and that now starts a process of consultation between Theresa May and the British public, and also Theresa May and the House of Commons. And that process should take place for a vote through the Commons, probably somewhere about the 10th of December going through to the 16th of December, because if that is signed off, and that's a big if, that will then need to be signed through the various European parliaments on the December the 18th as well. So certainly it needs to take place just before that situation. So one suspects it will be in that sort of week around the 10th of December onwards. So that's kind of where we need to be looking at. Now, if we have a look at the math involved, Theresa May needs enough votes, the majority, to get this through the Commons. And we've already seen the DUP party, who hold 11 seats within the Commons, or 10 seats within the Commons, suggesting that they won't vote for the deal in its current form. We've seen the Labour Party saying they're not going to vote for this in its current form. And we've seen about 25 or 30% of Theresa May's own party saying they're not going to vote for this in the common form. So with that math, one suspects it's going to be very difficult for Theresa May to pass this one. Now, in terms of how the market's positioned, certainly if you look at spot, we've been trading in a 126.50 up to 132 range really since July, and we expect that range to hold at least in the short term. If we have a look at risk reversals, which look at the skew between put volatility and call volatility and the premium paid for one or the other, you can see that that's currently sitting around -2, which basically means in layman's terms that the implied volatility within put optionality is somewhat higher than that of call volatility, and volatility is driven by the demand for those options. So certainly people have been paying up for put volatility and put optionality there, which suggests that in the options market, people are structurally short and structurally bearish on the pound, and they've hedged themselves quite significantly there as well. In the futures market, we can have a look at the Commitment of Traders report and have a look at the CFTC data and see the market net short 47,000 contracts, which has been reduced. The market has been more structurally bearish in the futures market, but we are still at a fairly punchy short position in cable futures there, and obviously you can extrapolate that into the sterling crosses as well. Implied volatility in the pound sitting at 14%, which is one of the highest levels we've really seen since the Brexit negotiations back in 2016, or the actual vote, should we say, in 2016. And to give you an understanding about what that actually means, implied volatility gives you an implied move, and we can see that through the options straddle pricing, and that sits around 429 points. So over a 1 month period, if we're using 1 month vol, we can see that cable is expected to move, or the market's implying a move of 429 points up and also 429 points down. We know that that is directionally agnostic in terms of volatility. So that suggests that we are expecting a big move. Now, I think volatility is fairly low at the moment. I think there's a chance we actually could see this having a bigger move. If we think that this is probably going to get voted down in its current form, then the question is what happens after that process in December? What my best guess is we are facing two situations. One is that we are facing a much larger degree of no Brexit scenario playing through. And of course, in that situation, we could see, and we probably will see, a sizable down in cable, well through that bottom end of the range, perhaps going as far as low as 122 at a guess. I think the bid will dry up, I think liquidity conditions will tighten up, and I think you're going to see a more protracted move, even though the market is structurally short the pound. With that volatility that comes through, that would give Theresa May more leverage to get a deal across. Both Labour MPs would probably be more interested in bargaining because the markets would be forcing their hand. I think it would also give the opportunity for Theresa May to go back to the EU27, rework the deal in the sense that then she can come back to the Parliament with that reworked deal and actually get the votes together to actually see this one pass. That's a big if, of course, but that remains my base case, is that we will see the markets showing greater volatility, will give Theresa May some more leverage to go and rework a deal, and then potentially if that passes, which I think it probably will on a second attempt, then you would see sterling having a significant rally, and also probably some relief coming through the FTSE as well, even though the fact that a lot of the companies do earn offshore, and therefore a stronger pound would also be bad for their earnings. But it would give people confidence in the economy. It would give people a bit more confidence to hold UK banks as well. But I think the pound's the one that I think you'd be expecting a strong move back up with the leverage that the financial markets are given. So I think where we go now from in cable and sterling crosses is going to potentially be very volatile. But we now go into a situation where Theresa May has a plan. and she has an agreement in place. She now needs to sell this to the public and also to the MPs. On the current maths, one suspects it's probably not going to pass in December 10th to the 16th. And therefore you probably could see a big down move in cable before we see a big move up as well. So the path of resistance is very, very uncertain, but I think you're going to see a very, very interesting tactical playbook as we come into that December vote.